I love Mortgage Reddit. Let's read another one, but this one's not a question, it's a post. Stop trying to compare rates without points. And I couldn't agree more. This person says, rates don't matter. Every bank effectively has the same rate sheets ranging from 5.5% to 9% in 1/8 increments. The difference between banks, brokers, etc. is the cost of the rate. A 6.5% might cost 1 point with lender A and 1.5 points with lender B, but you cannot compare a 7.25% and a 6.25% without factoring in the cost of the rate. You need to compare origination fees, points, broker fees, etc., whatever that lender calls them. Basically, you have to compare the rate and all costs associated in that section. Also, as in anything, cheaper is not always better. You often get what you pay for, and your LO is effectively a financial planner. That's kind of a dangerous statement. That's helping you make the largest financial purchase of your adult life most likely. Fair. I agree with virtually everything that person was saying. I just wouldn't call a loan officer a financial planner or a financial advisor. There are professionals that do just specifically that. Nonetheless, 100% you should not compare rates without comparing points. Additionally, you should not compare one estimate from one lender to another lender unless they have the exact same information. They are pulling those estimates and creating them around the same time on the same day as rates and fees fluctuate constantly. You're going to need to make sure that they are also qualifying you for the exact same type of loan with the exact same down payment and the exact same property type. There's a massive difference in interest rate between an FHA loan and a conventional loan. A borrower that has a 780 credit score versus a 680 credit score. There can be difference in pricing for a manufactured home versus a stick-built home or a multifamily home. There are going to be pricing differences between someone that puts down 3% versus someone that puts down 10%. And typically, if you are looking at a rate from some online lender that is just advertising random rates without your specific information being input, they are only showing the rates that they can get in the absolute most unicorn best situation. So you absolutely have to read the fine print. Oftentimes when you're looking at the rates that are quoted online, they are looking at these things. They are quoting somebody at roughly 30 or more percent down, 780 credit score, a loan amount under 300,000, and yes, there is a discount for that. A first-time home buyer using a conventional loan that often makes at or below the area median income. Yes, there's a discount for that also. And a traditional stick-built home that's a single-family residence that is going to be used as their primary. That combination allows for the absolute best pricing. So if you see something online that is way lower than what your loan officer quoted you, it's probably because the online scenario used the factors I just listed. You can absolutely only get a real true quote if your lender has pulled your credit, reviewed your documentation, determined your debt to income ratio, and the loan type you're going with.